Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of gold XAU USD. Thanks for joining me here. Gold again fell down, and we have been expecting bearish move for some time. If you have been following my analysis for last near about 3 weeks or so, I've been saying that I'm going to favor my short positions more because gold ultimately is creating a bearish structure. How do you know? All you have to do is just come to the monthly time frame or weekly time frame and assess the market structure. So let me actually show you from the high time frame what has been happening. And since August 2020, we have been looking for short positions all the way to 1680. Why? Because we have this W pattern which completed here, and from here the market was expected to reach 1680. Now, why 1680? If you ask me, it's very, very simple. All you have to do is just pick the Fibonacci tool and draw from here all the way to this level. This is 38.2. So the market was expected to reach 1681, and that is why I've been looking for short positions here. Now, because the market reached 38.2, it was expected to go higher, and we started to look for long positions from there. Then market situation changed. From this point, we have been looking for bearish positions, and as soon as the market started to create this particular structure, I mentioned in the Telegram group and other places as well that I've been looking for mostly bearish positions in the market, in this market. Why? Because of this market structure. Let me show you what I mean by that. I have explained this in previous videos as well, but this is very, very simple. You have a leg going upwards, then all you have to do is simply follow the market. It's basically creating lower lows, lower highs, lower lows, lower highs. Now this one is an equal one, and this is the one that I covered in the previous analysis that market participants previously thought this is a double bottom, and the market was expected to go higher, which is fine, and it is a double bottom. I get that, but if you go to the monthly time frame, the market is still expected to come back down and fill this wick up, and that's exactly what the market has been doing. Let me show you what I mean by that. If I go to the monthly time frame, at the start of this month, I mentioned that this candle is not a bullish candle. I know that there has been a lot of rejection from the bottom and it looks like a double bottom, but this is not a bullish candle, because soon after this the next candle usually comes back down to fill this candle up, and that's why the market has been falling down and it is still bearish. You can see that market is continuously is going to do something like this, right? So it is still bearish. We were bullish from here, bearish from here, bearish from here. There have been few long positions as well in the mix, but overall we are still favoring bearish positions in the market. This is very, very simple. All you have to do is just go to the higher time frame and follow impulses and correction rules and learn how to read the market using simple price action. If I go to the daily time frame and bring in the original analysis, which I shared few weeks ago, this is the breakout we were expecting. The market went into this trend line, created a rejection, then broke this, went to this structure zone, and then fell back down, got supported by trend line once again, tried once again, and now it has fallen back down. Now, because it has done that, there are a few things that you should be aware of. And this is something that I have shared in the previous in Telegram groups as well. These are two structure levels. And I shared that, beware of this zone, because these are two liquidity zones right now. Okay. If the market makers push it above this, then they will try to collect the stop losses, which are just above this right here, and they will also try to do the same thing here. And as soon as I posted this, I also noticed that the market started to go down, created a head and shoulders pattern, okay, which meant that they were expecting it to push it down, and that's why the last week the market started to fall down. If I show you which one was the next one, this is the head and shoulders pattern, and this is the support level. That actually is the same level that is present here, right, just right there. Okay, so the market started to break through that and it fell down, and let me open this. Okay, it fell through that support zone and started to go down, and in that process it also created an M pattern. So right now the market is standing at a location where it can actually go a little bit back up, but remember, it can still be bearish because on higher time frame we are still bearish, so that means we should be favoring short positions more. If you're going for long, that's fine, but remember, all of these levels which used to be support, now they will act as a resistance, strong resistance levels. So you'll have to make sure that you are watching them in advance as the price starts to go up, because at any moment in time it can start to fall back down once again. Okay, now on Vata and Visage, all bearish targets were met, which I gave in the previous analysis. Now this is 1806 level that I mentioned in previous analysis, that this is a very important level which the market has been using for quite some time. It created head and shoulders right at that point in time and then started to fall. Okay, so let's look at it on Vata and Visage. This is what I'm expecting. I've been talking about this monthly target for quite some time, and this Vata and Visage target as well. So ultimately, because the market is falling down, there is still a possibility that on monthly time frame it can fall down all the way to this level here. Let me actually put those levels for your reference. Near about, this is 15.7. This is 15. Um, 1580 or so, and then this one is near about 1553 or 1550, near about 1550 or so, because the white dot won't change but the water curve can change. So these are the targets on monthly time frame. The market can still fall back down to test the water curve. Okay, if I go to the weekly time frame, on weekly time frame, this is still bearish, and I've been talking about this for a long time, like because this has turned bearish after so many months. That is why the market is more bearish, and that is why we should be favoring more short positions. On weekly time frame, we have this target still available as target as 1646 level, 16 actually 1650 level or so. Yeah, 1650 level or so, near about that. And you see, the market is trying to do what? It is also trying to create an M pattern. So all it has to do is just simply break through this level to fall to this target here. Okay, and I'll show you when we go to back to the charts. I'll show you what kind of M pattern it is forming. It is actually confluencing very nicely with Fibonacci levels. Okay, let's look at daily time frame. On daily time frame, this is the target. This is the signal which was given, and this is bearish, and this is the target. The market has been able to reach that target very nicely, and in the previous analysis you can check that this is exactly the target that was given by Water and Research, and this is 1756. The market has come there. Now it is trying to go up. It's getting rejected by the same level, so because it is bearish. And what you can see that this is a huge engulfing sort of candle, a very strong candle, which I call as a re-entry candle. Why I call that as a re-entry candle? Because you see the water wave. The now market was outside the wave. It was on the right hand side of the wave. Now it has re-entered on the left hand side, which means the market is bearish. It is trying to um, go down, and this is the re-entry candle. This is strong candle. So again, that is also suggesting that market is expected to go down. However, we always look at both sides so that we are prepared for any eventualities in the market. Most of the traders, they think, oh, look, you're talking about bull trend and bear trend both at the same time. Yes, that's how the market works. What you should do is you should plan your trade in such a way. You should plan your trading plan in such a way that you are aware of all the eventualities. If the market starts to go up, how can I maximize that? If the market starts to go down, how can I maximize that? Because you can make money on either side. You do not have to be hard biased with the market, because market can do anything. So why not just flow with the market irrespective of your bias? In this case, my bias is telling me that gold wants to go down. On multi-year basis it is going to go up, but right now I can see that it can go down. That does not mean that I cannot take long trades. I can take long trades if the opportunity presents itself. For that, I'll have to be prepared with my bullish bias as well, or bullish trading plan as well. So on the bull side, what we can see is that there is an inverse head and shoulders right now. Okay, and we also know that we have a gap available here and gap available here. And if you see that if the market actually breaks through this neckline, then market can come to these targets. Ultimately, these gaps are going to get filled, right? Maybe this year or next year, or maybe maybe like after a few months. Ultimately, they're going to get filled, and that's why I'm saying gold is eventually bullish, but for now it is bearish. So if this head and shoulders is going to work, then it will have to find enough momentum to go and challenge this level, challenge this level, challenge this level, reach this level, and then only it will reach um, any of these targets. Okay, so for bullish scenarios, there are few barriers which you need to cross, but on bearish side, it has a lot of room left which it can go to. And besides, you see, it has tested this level, 1680 level, once, twice, thrice already. That means there are a lot of liquidity available below this. So it is possible that it can fall down. So I'm still bearish on gold, but there can be a good long opportunity for some time in coming days, in the coming week as well. So how do I capitalize on that? Let's go to the 4-hour time frame and see. This is the bearish target, so I'll be aware of that. The market can actually fall down to that because it is bearish, and this is 1730 level. But you see, the market is probably going to give me a blue color here at the bottom. If that happens, then I'm expecting this as my profit target, and second profit target can be this one. Let me put the lines there so that you have the targets. So this is 1774.82, and this is near about 1784. Okay, and why it will try to do that is because we had head and shoulders pattern here, this one, head and shoulders here. And usually what market tries to do, it actually tries to go back up to retest that neckline. Okay, and this is the neckline zone here. Okay, so if the market gives me an opportunity to go long, I will take that, but my bias is bearish, and that is why I will not look for a huge profit targets all the way to this level. I will go in steps. This is how the trading plan is formed, based on your bias and based on assessing the market conditions on both sides. You have to be assessing the conditions on both sides all the time, because you can make money on the long side and then you can look for short again. You profit on both sides, right? Okay, so this is what we have. Let's go to the 1-hour time frame. On 1-hour time frame, this was actually very good trade. I personally did not take it, but one of what a subscriber actually took this, and this turned out to be a very good one. I do not talk about pips and all that, but if you are interested, then this was near about 128 pips or so. And once you have taken this one, the short one, this was near about, after this signal, this was near about 80 pips or so. So it's very, very simple. All you have to do is simply look at the colors. Blue and green means buy, and red means sell. Very simple. Okay, but you have to use it in context. So this is what we have. All these levels are given to you now. Let's go back to the charts and assess in terms of FCP analysis. Okay, these are the levels in terms of FCP. The market can actually create a higher time frame M pattern, which I was just talking about. Okay, this is a leg, then we have correction, then we have a correction, and now if the market actually breaks through this midpoint, then we have market potentially falling to near about this level here. So what I will do is I will simply draw Fibonacci on the impulse leg here. Okay, from here to all the way to this place. This is this is 61.8. That means the market is expected to reach 78.6. So I'm going to put a line here. So the market is expected to reach approximately this level here, which is 1579. And this is the same level that we found on Vata and Visage as well. So you either do this manual analysis, or you can also, if you have Vata and Visage, you can also look at it. So 1583 is this one. And then we have 1553 level at the bottom. So somewhere in here, it is expected to reach if this midpoint, if this support level of 1680 is broken. But that is still a possibility. Okay, that is on higher time frame. So watch out what the market is actually trying to tell you in the month of September. Still bearish, but you can look for a long opportunities, as we discussed. Um, Yeah, that's it for this week. If you enjoyed this analysis, found this useful, if you have been using this analysis and have been profiting or learning, then make sure you support this channel. Make sure you like, comment on this video, and share it with other traders and trading communities. To express your support and gratitude. Your support keeps this free analysis and education alive, and I get motivated by all your comments and support and your shares, and I try to bring the best of my stuff to you for free, right? So I'll see you in the next one. Have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.